Time is 1:30. We'll call the meeting to order. Chris,
Shall I
call the roll.
Okay. Jerry O'Halloran.
Here.
Dylan Renz.
Present.
Chris Salzman.
Here.
Jim Wilton.
Present.
Sam Kibbers.
Here.
Okay, full board is present.
Very good. Any public comments? Hearing none, we'll move on to the approval of the minutes from the December 15th meeting. Everybody should have a copy of that. Do I have a motion to approve?
So move. Second.
Motion and a second. Any further discussion? All in favor signify by saying aye.
Aye.
Motion carries. Moving on to the consent agenda, we have 3 items here. Payment ratification for warrants 37 and 38. New invoices for payment approval warrant number 39, and the fund activity report for December 9th through March 9th, which should be in your packet there. Chris, anything we need to talk about here?
No, just that, just that the invoices on warrant number 39 have not been paid yet. We're just seeking the approval of paying those, and 37 and 38 have already been paid. And this can all be approved in one motion if there are no questions or concerns about any of the items in the consent agenda.
Very good. Do I have a motion to approve the consent agenda?
Motion to approve?
I have a motion. Do I have a second?
And second.
Motion and a second. Any further discussion? All in favor signify by saying aye.
Aye.
Motion carries. We don't have any new or old business on the agenda right now, so we'll move on to reports, and start with Mark.
Good afternoon. I'm Mark Ryan with Salem Trust. Salem Trust is the plan custodian. So we're the entity that holds the plan assets. We assist with invoice payments, and also we are the entity that's responsible for making sure that people who retire get their monthly pension benefit. So last year we had 466 benefit payments that we processed. One of the things that, if you remember, the board approved is the use of the pensioner portal. So last year we sent out, October 14th, letters to 37 active retirees. Remember, these are active retirees, people who are already receiving something, a benefit payment. Your activation rate was actually pretty good, 24%. Our average is 17.5% across all more than 3,000 letters that we've sent out to retirees. We consider your average, your activation rate to be pretty good, very good, as a matter of fact. So let's put this in perspective just for a second, right? When's the last time that you responded to a request in a letter form that was mailed to you, right? It doesn't really happen. Most people look at it and think it's junk mail. Ours has a little more credibility behind it because it references the board and us. So that activation rate is really, really good. Remember that that was only the first mailing. We'll do it again, right, to see if there's more people who will be interested in it about same time next year. We'll do it again in October. So thank you for the support of the pensioner portal, and we'll make sure that we follow through on our end too. In reference to retirees, I think it's important for the board to also know what happens when the retiree passes away, right? So what we do every single month is we take a look at 6 independent databases to see if there's a hit. That includes state tax reporting agencies. I'm from Ohio. They have an income tax, right? So they have a department that's set up to keep track of people who are paying their income taxes. State Department of Vital Statistics. When somebody passes away here in Florida, the funeral director is supposed to send information to the state, letting the state know that this person has passed away. Civil Service Commission, Department of Defense, Social Security Administration, and Railroad Retirement Board. So all those databases are searched every single month to see if there's a hit, and if there is, then we let foster and foster know as well. So in the background, it's important for the board to know that we're doing what we need to do in order to make sure that those people who are receiving a benefit from you are still alive and eligible for it. So again, that's one of those peace of mind statements that I share with the board. Finally, For those people who will be attending the FPPTA conference coming up at the end of June, we will again have our dessert function. And we are celebrating 25 years of being in this business, supporting government retirement plans. So we're planning on something really pretty special for our clients and anybody else who chooses to attend. Do you have any questions?
Yeah, I've got one quick one. You processed 466 benefits this last year,
Right.
in 2022, you mean?
For the period ending December 31st, 2022, for the 12 calendar months.
What I don't know is how many retirees do we have?
So we sent out 37 letters.
37.
So 37, roughly, handle the multiplication, and that should get you pretty close.
Okay, thank you, sir.
Right. Also, finally, I'd like to note that unfortunately I had a conference call that was scheduled at 4 o'clock, and it's been moved up, so I may not be able to attend the entire meeting today. Yeah. Thank you. And again, thank you for being a client of ours.
Thank you, Mark, appreciate it. Carrie?
Very good, thank you very much. Typical stuff in your packet, so we'll start with the bigger book, which is the December 31st period end performance report. And just flipping to the very first page, page 1, there's a letter from our CEO, Mike Welker. He always likes to tell you guys what we're up to once a year. He likes for you to hear directly from him. So going to hit very quick, just a couple highlights. We're about $90 billion in assets under advisement at the end of December, about 93 employees and looking to add to that. We added 3 new partners to the partnership roster, a couple folks on my team, and then our head of performance reporting, bringing us to 10 out of 93 employees who are partners. And last but not least, Mike always, I think the crux of the message is always thank you for your business. And so on behalf of Mike, myself, and the rest of the firm, thank you for your business. We would not be here without you. If you ever have any questions about kind of what we're doing, how we're structured, or anything else about the firm, please let me know. There's quite a few names and acronyms and departments on page 2, but I won't go through those unless there's a specific question. If we flip in your books to page 5, which is the period again ended December 31st, which feels like a long time ago, especially after the last couple weeks in markets, but very briefly, we'll just touch on the end of December, and I'm looking at the top right equity chart there in your book. And all of the bars go to the right, which is always a good sign. That means all of those segments were positive for the quarter. So within equity there in kind of the top third, you see the S&P up a little north of 7.5, mid and small caps up, kind of 6 to 9% range. And what was going on in the background was, really the market's still very closely watching inflation. CPI hit a high of 9% year over year in the summer. It was kind of trickling down to about 6.5 at the end of the year. And markets were feeling like, maybe the Fed is towards the end of the rate hike cycle that we saw that was so aggressive in 2022. Maybe there'd be a hike or two in 2023 and we'd hit a terminal rate. And so you see that kind of coming through in equity markets with the strong results for the quarter. It was a very value on quarter, which just means, sectors like financials, industrials, materials, energy, those more defensive sectors did very well, where the areas like, particularly technology, but also to some extent consumer discretionary, which are very impacted by rising interest rates, did not do quite as well, although all the segments were positive. Within international equity there in the middle, the all country was up about 14%. So really international equity was kind of the big story for the quarter. Developed markets up about 17 and emerging markets up about 10. Few different things going on here. China abandoned their total COVID lockdown, which kind of means they're getting back to business a little bit there, which was viewed positively. Also, the dollar weakened through the quarter. The dollar's been very strong as compared to other currencies. But even while our Fed was hiking interest rates through the quarter, other banks like the European Central Bank were also in hike mode. And so the dollar actually weakened about 7.5% for the quarter. So that was a tailwind there for international equity as well. And then finally, it seems like, Europe is adequately supplied from an energy standpoint. Before the Russian invasion of Ukraine, Europe in particular got a lot of their energy supplies, natural gas, oil, et cetera, from Russia. They had to kind of find other sources and stock up, but it seems like they've had a warmer winter, some good conservation, and all of that that segment seems to have weathered that just fine. And then last but not least, within bonds, in the bottom third, kind of U.S. bonds, we were positive in that segment, almost 2%, even though, as I mentioned, the Fed did hike the Fed funds rate 75 basis points and 50 basis points through the quarter. And essentially what you saw there, and I'm going to flip in your books to page 12, to the bottom right of page 12. And when I look at that bottom right chart, I'm looking at kind of starting at the green line and looking at the yellow line. What you saw was, rates on the short end of the curve did react to what the Fed was doing and kind of pop up. But really that upward movement was limited to kind of the 2-year and shorter. The rest of the curve was relatively flat. And we actually saw credit spreads contract a little bit. And so that's actually why bonds were positive for the quarter. So kind of a market reversal of where we were in 2022 for the first 3 quarters, being positive in public markets. There's obviously been some volatility kind of since then, but that's where we were at the end of December, and I'll give you some more recent updates when we talk through the flash report. Are there any questions about the economics piece before I get into your portfolio? Okay, hearing none, I'm going to flip in your books to page 14. And in the top banner on that page, you can see the market value of the pension was just above $21 million at the end of the year. So it was $21,141,740. As far as your allocation is concerned, you all were just about 53% in domestic equity, a little north of 14% in international equity, about 29% in domestic fixed income, a small piece, less than 2% in global fixed, and a bit of cash as well, a couple percent in cash. And if we flip ahead in your books to page 16, you'll see your asset allocation is really pretty close to where we want it to be. One of the things you'll notice is that global fixed composite is underweight about 3%. But if you'll recall, we've added to domestic fixed income instead of replacing a piece of that. And so if you kind of net those two out, you're pretty close to your targets really in all of the segments there. So no recommendations for you all to rebalance. The portfolio looks actually pretty good and pretty close to where we want to be.
Can you remind me again, do you need our permission to rebalance, or is it just something that you do if you see fit?
Yeah, so that's a great question. So if I need to raise cash for your plan, I do have the ability to kind of pull your market values and raise from wherever may be overweight. And so that's kind of a natural rebalancing when we're raising cash. If that's not the case and it's not kind of a cash raise, I would come to you and recommend a rebalance, at our meetings, and you would authorize that at that time. So if you need cash, I'm able to kind of recommend where to take from, which is a nice mechanism for rebalancing. But if that's kind of not the case and you're still outside your policy targets, I would come to you at the meeting and recommend that to you.
Okay, and then when you're getting your contributions, you're just adding those to the for instance, because
Yes.
we're adding more than we're taking out.
Yes. So when we get contributions, that's exactly right, Sam. I do the reverse. I would just add to anywhere that you're underweight. So that's obviously a nice opportunity
So we'd be adding to
rebalance
fixed
too.
income, for instance, with the money that we're getting contributions. Typically,
Yeah,
just typically
if
right
this
now.
looked exactly the same, yes,
Okay.
that's exactly right,
All right.
yes. Flipping in your books to page 19, and we'll kind of quantify the quarter here. You all were up about 6.3 gross and about 6.2 net of fees, pretty much in line with your index, which was up about 6.6. Obviously, on the 1 year, we're still coming off of that incredibly challenging period, so we're down a little more than 17 on the 1 year. But if we keep a longer-term perspective, net of fees, on the 5 year, you're still at about a 5.3. On the 10 year, you're still just shy of 7. So even though the last year was incredibly painful, we had come off so many strong years that really your longer-term numbers, particularly your 10-year number, is still pretty close to where we want to be. Within your individual segments and equities overall, you all were up about 8.6, the policy up about 9. Obviously, you've got the total stock index within the domestic composite, that was up 7.2. In the international segment, you all up just about 14%, pretty much in line again. The index was up about 14.4. WCM, your international manager with a bit of a growth orientation, that, kind of technology, consumer discretionary, a bit of a drag. That fund was up 13.4, about 1% behind the index. And then the total stock index for Vanguard was up about 14.7. Within your fixed income segments, you all were up overall about 2. The index across the board was up about 2.3. Within domestic fixed income, Garcia Hamilton up roughly 2.2 over the index. Good quarter for corporate securities and really their kind of yield curve positioning as well. And then global, you all were essentially flat. We did see the Japanese government kind of take a peg off of their bonds. As I mentioned, you've seen other central banks kind of hiking interest rates as well, so that segment was essentially flat. I do want to make you all aware of a development at Garcia Hamilton. Within the last week, I was made aware that Gilbert Garcia, whose name is obviously on the sign, is running for mayor of the city of Houston. So I feel like, that has the potential to be a pretty significant distraction. And so we are looking at that pretty closely and kind of evaluating what the succession plans are, what the thoughts are there. So I will come back to you on that. If we are not comfortable, I'll kind of come to you with some other ideas. So I did want to let you know. That's a very recent development, about a week ago, but I will keep you posted as we look into that. Any questions, comments, anything I can answer on December 31st?
These are all total return figures, correct?
That's right. Yes, they are. Yeah, we wouldn't do like just income or just price returns unless somebody specifically asked for
So,
some reason.
our fixed income should look a lot better next year?
Yes, absolutely,
If we're
yeah.
getting a 5% yield?
Yeah,
it'll be better than
absolutely.
the-
Yeah. Yeah. I mean, I think, it's going to continue to look better. It's obviously going to take some time, right? Because, longer bonds in their portfolio will take some time to kind of roll off. But yes, Garcia Hamilton in the past has made pretty considerable use of floaters, and obviously those are going to adjust up higher. So yes, you can expect that that's going to continue to look better over time as rates have risen as much as they have this year.
Just a brutal year for bonds last year.
Yeah.
It's the worst bond market
Worst bond ever. Yeah,
Yeah.
worst bond market ever.
since 1798, so I
Yeah.
don't really count that as a real.
That's what I said. I've heard that stat, but I
Yeah, I
have
don't
no
think that's
data
a real
behind
one.
it. So I will tell people I've heard that it's the worst going
There's
back
some
to
modern
the
times in there.
to the Revolutionary War, but I don't quote the stats because I don't have any data on that. So suffice it to say, to say it was challenging it doesn't do it any justice at all.
You do remember? Yeah.
You were just a boy then, Scott. And then we've included, obviously, the update through February. For a little bit of color and context, we had a strong January. Equity markets were up 7%. But in February, the strong job report from January came through, and obviously concerns about inflation continue to kind of hang out there. So for the month of February, we have you guys down about 2.6, but January was so strong that we have you at the fiscal at about 9.8 as
Carrie,
of
what
print
page are you
through
on? I'm
February.
sorry.
Oh, I'm sorry, I
You're on the
switched
flash
over to
report?
I switched over to the kind of skinny one.
Gotcha.
So again, down about 2.6 for the month because February we pulled back a little. But in that next column, fiscal year, you can see we estimate up about 9.8 through the end of February. Obviously, we've seen, some banking failures here recently. Silvergate, which was a financial group that had some ties to crypto. You saw Silicon Valley Bank be closed by the FDIC at the end of last week. Signature Bank, kind of same thing. The good news for you guys is Silicon Valley Bank was a fraction of 1% of the equity index. Less than 0.1. So no exposure there. None of your managers held the equity or the bonds there. So you didn't get wiped out on kind of the equities or bond holdings there. So you all, have no exposure to those names. Credit Suisse was kind of the next, big bank to hit the news. But the Swiss monetary authorities lent them $50 billion and are kind of supporting them because after 2008, Credit Suisse was named a systemically important financial institution. So I think there's some issues there. I think they're a little bit older. It seems like those issues came about under prior management. But I think you can, obviously more support has been kind of lent there as compared to some of the Silvergates, again, that had some ties to crypto, and the Silicon Valley banks that seem to have made some, just what we call duration mismatches, which means you take in deposits, but you bought these long bonds, and then after the worst bond year ever, just kind of got crushed on the pricing of those. And it's fine if you can hold them, but if you have a run on deposits and you need to sell them to raise cash, then you start running into problems. So far, no exposure there. Obviously, we're watching what's going on in the markets very closely. And happy to answer any questions. Again, I don't think this is necessarily some broad, kind of broad indication of weakness within the financial sector, particularly some of the, bigger name banks. But obviously, we're watching the developments very closely, and as things continue to evolve, we'll keep you guys posted.
Very good. Many questions?
Yeah.
How, recently, in the past month or so, excuse me, we've had a lot of talk about programs coming out of the government regarding social, environmental, and governance and
Yes.
things like that.
Yes.
Do we have any exposure that way?
No, we don't have any managers that are kind of ESG focused, so I can just say no. And I'm sure Scott will probably tell you, House Bill 3 is on the table, which is going to kind of have more to say about ESG investing and not considering anything but pecuniary factors. But we don't, Jerry, we don't have anything that is ESG focused. Everything in your portfolio was chosen for, risk return, kind of manager quality types of reasons. No ESG stuff going on in your portfolio.
Is that coincidental or intentional?
I honestly intentional, because my job is to bring you, the best kind of risk return options.
Okay.
And I have had plans that have said, oh, we don't want to be in energy or whatever. You can't really impose, and this kind of public fund as a fiduciary, you can't really impose your own values or ideas on the fund, because if energy has a great year, potentially, the beneficiaries have lost out on not being in that space. And so everything that I bring to you is going to be from a risk return perspective and lens only.
Okay, thank you.
Yes.
And in fact, Vanguard is specifically kind of, not anti-ESG, but they're a true index company, so they're not using their ownership of these companies to sway boards of directors or anything like that. They've actually come out very strongly against it, that they do not vote their shares, except for, pretty benign things. So, and since, 90% of our portfolio is in Vanguard right now? we don't
Yeah,
have
I'd say
to worry
that's a
about
fair
it.
estimate. A very high percent, right? Well more than half, yeah. Yeah.
Now, BlackRock, on the other hand,
Yeah, that's a different story.
Gary, thank you very much.
Yeah, my pleasure. Thank you.
Turn it over to Scott.
Let's see, what do I talk about first? Let me talk about some legislation first. With regard to the Florida legislature, I'm happy to report that there are no bills pending that will change Chapter 185, and I'm always nervous when they start fooling around with Chapter 185 and 175, but there's nothing pending at this point, so that's good news. On the Fed side, we did have a fairly significant bill that was adopted at the end of last year, called the Secure Act 2.0. It's 2.0 because there was a 1.0 a couple of years ago, and you may remember that back then we had to change the required minimum distribution date. All the young people in the room don't know what that is, but that's essentially the date at which you have to start taking money out of your retirement programs, IRAs, and what have you, so they can be taxed. They changed it a couple of years ago from age 70 and a half to 72. And now this new bill, 2.0, changes it to 73, and ultimately we're going to get to 75 in another 10 years, I think is what it is, and I suspect they'll do something in between. But that is in this 2.0, but 2.0 is much broader than that. It basically makes changes to just about any kind of pension program you can think about: IRAs, 401ks, defined contribution, defined benefit. Just about any program you can think about, there's something in this bill that was done to make some changes. Not that they're all bad. I think some of them are making things better maybe for retirement programs, but be that as it may, the only reason I'm telling you about it is there are a couple of changes that we've identified initially that will probably need to be made to our plan, because remember, our plan is a tax qualified plan, so we need to keep our plan and our language in our plan in accord with the requirements of the statute. that date changed, and we're gonna put some different language in there, but that's something that we're gonna be looking at. Right now, we're waiting for IRS to, as I always chuckle when I say, provide us with some help, in the form of, guidance. Typically, when they pass this legislation, it's not always crystal clear exactly what needs to be done in order to apply. And so, the IRS typically issues guidance in the form of regulations and what have you to assist in interpreting the language. Yes, sir.
Can I ask a question that I should know, but I don't? So let's say somebody's in our, as a police officer, I don't think they allow you to work past 75, do they? Or would they? Do you have anybody that's that?
I know what the answer is. The question,
Yeah.
the question is, if you get to be 75 and you're still working, do you need to start taking benefits? Well, you can't, because you have to retire and leave employment in order to start the draw.
Yeah.
But for governmental plans, the required minimum distribution date is the later of the date that you terminate employment or those dates.
Okay, all right.
So that's the answer.
Do you have anybody that's that old in the,
No.
older in the plan?
But
That's why that really doesn't affect.
I was just curious, I never,
Governmental pension plans much, but it's language that has to be in, because it's a tax qualified plan, language that needs to be in the plan.
Okay.
Just to recognize the fact that we recognize that there is a restriction.
the way you just said that, though, they have to terminate employment. It's terminate employment with that particular retirement plan, not terminate employment anywhere.
Well, terminate employment with that plan.
Just with that
When
plan.
they leave
Got it.
employment here as a police officer,
Right,
and if they're over 72 or whatever the date is, the applicable date is,
right.
then they have to start receiving it immediately. And of course, for most of our plans, that's easy.
Yeah.
Everybody who retires wants to start to get their money right away. There'd be no reason for them to delay it. So that's why I say it's not typically an issue.
Well, some of these guys would go to work for another department in another state or another county, and will be continuing working,
Right,
but maybe in a different plan.
right?
But they still have to take their money out once they reach the 72 or 75
Out of this plan.
out of this plan. Got it, okay.
Yep.
But no options.
Yep.
Okay,
And again, they wouldn't have any reason to delay it, because if they weren't getting it, they would lose it. So why would you not, as soon as you leave employment here,
'Cause it's-
regardless of what age you are, why wouldn't you apply immediately if
'Cause
you're
it's
eligible
taxed.
for a benefit?
because it's taxed.
Well, you're always better off receiving the money and paying taxes than not getting the money at all.
Well, maybe in your plan, but not mine.
If you're giving up the money by virtue of not taking it,
You're not giving it up.
yes, you would be in this plan if you.
No, you'd be continuing to invest it.
No, this is a defined benefit plan, so you have a right to receive it every month,
Got
right?
it,
If
got
you
it.
don't get it, you lose it.
You lose it, got it.
Yeah,
Okay,
so it's a different,
that was my question,
different
okay.
situation, yeah. Okay, let's see, that takes care of the legislation, and like I said, that was kind of a preview of coming attractions. We will be bringing back to you, some provisions that we'll have to add to the plan, as soon as we get a little guidance from IRS. All right, what else do I have? Our ordinances, the multiplier ordinance did get passed just the other day, March 1st. I had to figure, I actually got on and saw it happen. But anyway, so I knew it had got adopted, so that, if it hasn't already, it needs to go to the state, right?
Yes, sir, it has
Alright.
been sent.
All right, so that takes care of that. Now, the other ordinance that we had was the 8-year drop. We wanted to extend the drop to 8 years. And the actuary, wanted to wait until he saw whether the multiplier ordinance got adopted before he did the cost of extending the drop. Because if you recall, there was a little expense associated with extending the drop. But it's different if you have a higher multiplier, obviously the impact is gonna be different. So that's why he had to wait.
what was the multiplier? Where did it go up to?
Went from
3.25.
three to- yeah,
And it was up from 3?
Mm-hmm.
Is it going to go up further in the future? Is it like stepping up over year, or is it just a one time?
It was originally, many years ago, 3.5.
Yeah.
And then they made a change to 3, and then they've stepped it back to kind of met in the middle in their
3.2?
contract negotiation.
3.25?
Yes.
Is that for everybody, or are some people grandfathered in, or?
It depends on, yeah, that's for everybody who isn't on the 3.5.
Who's still working, if they're gone, they don't get it.
Yeah,
Right. But for those who are, when it was 3.5, if you started with the city then, but the 3.25 is for everybody else.
Or in the drop, right, Chris?
Correct.
Yeah.
And
Or the-
that'll require the city to put up more money then, essentially.
Yeah, and they get an impact statement, they get a statement from the
Yeah.
actuary that tells them exactly what the impact is.
Shouldn't really have too much of effect on us, because we'll have more money coming in to cover that
Yeah,
contingency.
Yeah,
And once it gets passed, it'll be what, next year after they,
it's already passed, and it's in
So-
effect now.
so we're waiting for the other thing to happen, and then they'll give us a report, and then they'll go to the city, and, when did they do that? Just once a year they'll end
What
up
are you
doing
talking
that, or? Well, to provide, obviously, we're gonna be underfunded now, right?
No, there's an impact statement that's done, and when I say an impact, that's different than the actual evaluation. We already
Yeah.
approved the actual evaluation.
Sure.
The impact statement is just that, it's what's the funding impact of
Yeah.
making this change to the ordinance.
So say it's $1 million.
Yeah,
So the city will have to do that in 1 year, just next year?
no, it'll be an increase every year.
Kristen Simeon, Finance Director. It'll be spread over the life of the plan, so they did give us an impact statement to say approximately what they think it will be annually, but of course, it depends on the investments every year.
Okay.
Thanks.
Okay, so the other ordinance that we were waiting on, like I said, we just got the impact statement for that, and I think you all had authorized me to send that to the city manager once this other got done. So I have it on my list of things to do, to send the impact statement along with the 8-year drop to the city manager, and hopefully we'll get that taken care of as well. There was a little impact associated with it. Did y'all get the impact statement?
I didn't have a chance to send it out, I'm
Yeah,
so sorry.
It went from 569,000 to 575,000. So it wasn't a big increase, but there was a little increase. And, but that's what we're waiting for. So I will be sending that to the city manager, and we'll see if we can get that done as well. All right, any questions about the ordinances?
No.
I will send you all the actuarial impact statement. I apologize. I've just been a crazy week, but I will email that to you. I am going out of town this week, but Monday I will add that to my list.
Thank you, Chris.
All right, I also did a couple of memos. The first memo has to do with the buybacks for prior military service and prior police service that we have in the plan. Maybe explain it for everybody so you understand what the program is now. Essentially, what the plan provides is that somebody who has police service prior to the time they come to work here, or they have prior military service, they're allowed to purchase, in our plan, up to 5 years of additional credited service between the two, military and police service. So if you had 3 police and 2 military, you could buy 5 years of credited service. In order to buy that service, they have to pay for the actuary to do a calculation. The actuary calculates the total impact, cost impact to the plan in giving that person the additional year, 2 years, or 5 years, or whatever they're getting, okay? The actuary comes up with a lump sum amount that has to go into the plan, and under the care plan provisions, that total lump sum has to be put in all at once, okay? And when you put in the money, you can roll money over from an IRA or something like that, but if you don't have that money to roll in, you'd have to write a check for it. Maybe go out and take a loan out to be able to write a check for it. And then you would get the additional credited service. The additional credited service that you purchase doesn't count toward vesting, but it does count toward eligibility for retirement and for the calculation of the benefit, okay? So that's the current program. What this is suggesting, and we've actually been doing this with a lot of our clients over the last couple of years, this is suggesting that we may want to consider putting in what I call an easy payment plan into the plan. And this would allow that police officer who wants to buy 5 years of service, it would allow him to purchase that 5 years of service rather than a lump sum. He could purchase it over a period of time by doing payroll deductions from his salary. Most of our plans have been using 5 years to allow them to purchase the service. And so they would be allowed to purchase the service. We take the lump sum amount that they have to put in and divide it by, 60 months, right? And it would be that amount plus interest at the actuarially assumed rate in the plan. I can't remember what it is, 7%, okay? So they could put it in with interest at 7%. The reason for the interest is because if they're putting it in over time, we're losing the return on that money that would have been a lump sum, right? So by putting in the 6% or 7% interest, actuarially, we come out without an impact to the plan and allowing that to happen over 5 years. So now, some of the questions I usually get is, well, God, what happens if the guy leaves, or he dies, or he retires before he pays for all of it? Well, the answer to that is he would get a prorated amount of service, based on the amount of money that he had already paid.
Sure.
So this should have no cost associated with it, because again, it's an actual calculation. I am doing the eight-year drop. So if you want the city to consider this, I don't know this rises to the level of a negotiable benefit, because all it is a way to pay for the buyback. And I know we can get a no impact letter from the actuary. So if you're interested in allowing this and providing this to the police officers who may want to purchase the service, I can put it into that ordinance.
It's a nice option to have.
I think it is.
Sure it is.
Yeah, if there's no impact on the plan, I don't see a reason not to do it.
What would be a typical buyback cost on the 5 years that you use as an example?
It varies. It runs like 18% to 20% of
Yeah,
the annual.
it depends on your age, how far you are from retirement. Okay, there's a number of factors that go into it, so I couldn't really give you a figure off the top of my
From
head.
past employees.
It's not cheap.
Yeah, from past guys that have done it, it can run anywhere from $20,000 a year.
That was my question.
Yeah.
Okay.
Yeah.
Ballpark figure. Okay, thank
Is
you.
this fairly common? I mean, does this happen a lot?
No, a couple of guys have done it.
I just had one officer recently purchase, I'm going to go to his folder really quick. I believe he purchased 5 years of prior service, and at the time, there was no payroll deduction option, but of course, if there had been, I would have had that conversation with him. Look, if you have a lump sum, you could put that down, and we could show you your finance options. You know, I make sure I tell members about the interest aspect of this. It's not just that you get to pay it over time, there's more to it too. So this person, the total cost as a lump sum for 5 years was $75,356. Had he financed it over 5 years, that could have ended up being, $95,000 with interest. So that's a conversation I would have with the members if you guys do want this, baked into the plan. I understand how this all works, and I'm happy to have those discussions with them, but I think it's a great option.
Did he have, and how old was he?
He was.
Could you roll this over from another police
He was
department?
born in '86, so he's 30. He's 37. Hired in 2018.
Oh, so he's fairly young, and still sitting, it's pretty pricey.
Yeah.
Pretty pricey. But this will make it maybe a little easier. Also, it does provide in the plan that you can make multiple purchases, remember? So you could see that number and say, well, I'll just purchase 2 years. And then you could do that over 5 years, and then you could come back and do it again. If you stay long enough. So, all right?
But they can only purchase 5 years total, right? Of
Total.
Gotcha.
Combined.
Combined.
Yeah.
Okay.
Somebody want to move to direct me to put the easy payment plan into the proposed 8-year drop?
Before we do that, can I ask another question?
Sure.
What's the downside to this? The downside? Anything that you can think of?
I can't think of any downside.
I couldn't either, so I'm asking. Okay.
Maybe Chris.
I just wanted to clarify Sam's question about rolling over from another police department. As long as they take those funds out of that police department and they're not going to receive a benefit, I believe, right? Then they could roll that in. If they're already going to receive the benefit, the retirement benefit from their other police department, they couldn't.
Is that the question he's asking?
That's what he was, I thought he asked about rolling over from another police department.
I just didn't know if it could be, if it's just another police department. I didn't get that in depth in the question.
And obviously, you know what a rollover is. If it's a rollover, you can roll it over, and you can use that to purchase the service.
Yeah.
I think what Kristen is referring to is if you have, say you had 8 years in FRS, okay, and then you come here, the question is, can you purchase that 8 years you have in FRS? The answer to that is no, because you're vested in FRS, and you have a right to get a benefit from FRS, and you can't purchase the same year twice.
Can't double
Can't
dip.
use the same year twice. So I don't know if that covered, did that cover a question you had in there somewhere?
Yes.
Okay, all right, so did we do a motion there?
Motion.
I have a motion, do I have a second?
Yeah, second it.
Motion and a second. Any further discussion? All in favor signify by saying aye.
Aye.
Motion carries.
Okay, the only other thing I had is I also did a memo regarding overpayments, and the motion regarding overpayments is, this kind of results, and this is like the third or the fourth time I've done this memo over the years, and I do it periodically, and the reason for that is I just had a couple of overpayments in one of my other plans, and, or in a couple of my other plans. Overpayments, basically, you may ask, well, how do we have an overpayment? I mean, when somebody, their benefit stops, don't we stop it? And the answer is yes, we're supposed to, but sometimes it doesn't happen. The typical situations are somebody has one of our benefit options is a 10-year certain life benefit. What that means is that you, the retiree, get the benefit paid for your life. But if you die before you've received 10 years worth of payments, then your beneficiary gets the remainder of the 10 years, and then it stops. So that's a stop date. All right, we also have a Social Security option in our plan, another optional form of benefit. What that provides is that if you retire from the plan prior to your Social Security age, I mean, it's not unusual for police officers to retire in their late 50s, okay? Social Security for you may not kick in to 65, 66, maybe even 67. So essentially you have a period of time between when you're starting to get your benefits from us and the time that Social Security kicks in. What this option allows you to do is front load the benefits. So essentially what would happen is that you would get a higher benefit from the police plan from the date you retire as a police officer, say at 58, and to the date that your Social Security starts, maybe at 66. For those years you get a higher benefit. Then when Social Security kicks in, the benefit from this plan goes down, all right? So that you have a more level benefit amount over your entire retirement years. So that benefit is there. But that obviously creates a change date, right? Meaning the benefit amount has to change, go down, all right? So if for some reason we get to a stop date and the benefit doesn't stop, or we get to a change date and the benefit doesn't go down, that results in an overpayment, okay? And unfortunately, it happens occasionally. I think that we'll talk about how we're pretty well covered at this point, but I can tell you personally, I'm usually the one that has to write to that 83-year-old lady who we've overpaid for 5 years, and we have to tell her that we're stopping her benefit, and oh, by the way, she owes us $50,000. Not a fun thing to have to do. And a lot of times we don't get the money back. So what I'm suggesting here is that we, in writing, identify all these change and stop dates, and then send that list to the custodian, Salem, have them sign off on it, acknowledge we received these, and send it back to us. So why are we doing that? We're doing that because if they don't change it or stop it, and we overpay, and then we can't get the money back from that 83-year-old lady that I was talking about, we can then go to the custodian and say, make the plan whole. You were told to stop this or change it if you didn't do it. And I've actually been successful in getting the money back from custodians when this happens.
So they're willing to sign that?
Oh, yeah.
Okay.
Well, it's their job. They're supposed
Okay,
to be
all right.
stopping and changing it. So,
I don't know, they might say no.
can we get them to acknowledge what their job is? Yes,
Yeah.
I think we can. No, I think there's no problem with it. I think we could probably tell you, though, we're pretty well covered with Salem, because Salem, actually, with new retirees or beneficiaries, we're actually, their form provides a place to put the change and stop dates in. And they acknowledge it and send it back, right?
Yep.
So we're already sort of taking care of it. But I think it's good to look at the whole plan, the whole list periodically, and make sure that we've got something we've got all the change dates and stop dates identified, and have them acknowledging all those dates. And I think it's a good drill to go through because it's a lot easier to do this than it is to go have to collect those other payments back. The only other thing that's in that memo is the thing that Mark talked about, is the death checks. And essentially what he told you is that they are running all of the names that we're paying benefits to, be it a beneficiary or retiree, whatever. All the names are being run against, I learned today every month before they send them out to try to identify if somebody's passed away, and obviously they notify our administrator, and we can take the appropriate action. So I think we're in pretty good shape here, but I do think it's worth going back and having the administrator check the current list of people and make sure we got those change and stop dates covered. That's all I got. Nothing you need to, no action you need to take on that.
Can I ask a clarification on that, on the stop dates you're talking about, in the amounts? You need an acknowledgement from who? The employer, the employee rather, excuse me.
No, because the stop date, like I said, in my example of tenure certain life, I'm the retiree, I get the benefit for 5 years and then I die.
Right.
Then we start to pay the beneficiary. And we know that the beneficiary is gonna receive 5 years worth of payment, so we know the date that it's supposed to stop.
Right.
So the beneficiary doesn't have to acknowledge anything, that's a fact, that's what the benefit is. So all we need to do is keep track of it and make sure it gets.
I guess my question is, the employee himself has acknowledged the fact that these stop dates and increments do exist.
Oh,
And
yeah,
they're real.
because that's the benefit,
And
when
he
they're
gets a copy of it.
selecting, that's the benefit
Yeah.
when they retire with a tenure certain life,
Okay.
obviously they make that choice.
They made that choice,
And they
okay.
also select the beneficiary that's gonna get the remainder of the payments, should they pass away.
I hate to ask a really dumb question, they acknowledge that, but has that been validated, the fact that, can they be challenged, is what I'm
I
saying?
don't think it can be challenged, because they sign off on the benefit, the
Okay.
benefit selection.
Okay.
And initial the selection, so I think we're good. All right, that's all I've got, that's enough, right? Anybody have any questions or anything else?
All right, thank you, Scott. Chrissy?
And I really don't have much. I just wanted to update the rest of the board. At the last meeting, you all approved the purchase of the member statements. If you recall, they were previously included in the valuation, but then they ended up being at a charge of $25 per member, which, you know, they're actually more accurate than they have been in years past. They're now generated using the, I believe, last 5 years of salary versus just one, so they're a little more accurate. Those have been distributed to the members via email, and then I gave the paper copies to Dylan today to distribute, so that has been completed. And if anybody wants to attend the annual conference coming up in June, that's more of the networking event, more of a social function than education, but a good opportunity to talk to other people in the industry. And then there are 2 trustee schools coming up in October and January. So let me know if you want to go, and that's all I have.
Very good, thank you. Anything else from the board?
How long are we gonna be meeting here?
How long?
Yeah, does anybody have any?
There's still trailers in the parking lot down there.
For
So-
quite a while.
Quite a while?
Yeah.
Really?
Oh, wow.
Like starting now or total?
Wow.
Yeah.
It's a great
It's gonna
place.
be a while.
I like this.
Kinda nice.
Just curious.
Is everybody familiar with the ESG we talked about earlier? Okay, good, thanks.
I've always had an issue with that. I never thought fiduciaries should be doing that kind of thing.
No.
That's, you know.
You can do it, you just have to do it on your own.
Amount of risk. I think that's your responsibility.
Yeah, do whatever you want with your own money, but not as a fiduciary.
Carrie and I actually, we work with another board who has a trustee who's very passionate about not having any investments in tobacco whatsoever. Very passionate. Did I say that correctly?
That's probably the appropriate way.
So that's a good example of this whole ESG thing, right? Somebody who has it's about values versus, like you said, versus return, right? I mean, I'm not an investment person, so it is new to me, but that's the concept.
No, you're right, you're right.
Very good, well, that will adjourn the meeting. Our next meeting will be June 15th, 2023 at 1:30 PM here at the Military Heritage Museum. Thank you very much.
Happy St.
St. Patrick's Day tomorrow? Is this a warm-up?
It's St. Patrick's Month. I don't think you understood. Yeah. But the river wasn't green all year.
And I may
Yes.
run out quickly today because I'm on my way to Tampa right after
Okay,
this.
I know I have this
Outside
that I
my
haven't
office,
signed.
I have Irish-only parking. Others will be towed away.
Try to get that
Pull
back
up and
over
look at
today.
that, read it and back away.
That's okay. You know what? If we have to do it at the meeting, it's not a big deal.